Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is April 2nd. It is a one-year anniversary, Jace, to Liberation Day.
Absolutely.
How are you feeling liberated today, sir?
I think I'm feeling a little better than where we were last year at this time, but
it was a day last year. A lot of you folks, if you're just tuning in for the first time to Professional Ag Marketing or don't talk to us a whole lot, last year was a very interesting day in the marketplace for many of us as we awaited Trump's game show. Many of us could probably suggest it as he brought up a board with a country list and tariff list. It was quite the event to watch, especially on our side, watching the markets alongside of it. It was a very interesting month last April, to say the least, Jace.
it absolutely was.
Today, we're going to talk about the cattle market, another very interesting market as well. This week, we've seen some massive rallies across the futures and the cash side of things. I just want to bring up, Cade, the June chart on fat cattle there. I just want to talk about this incredible spike higher we've had. We've got some moving averages on the page, 10, 20, 100, and 200-day moving averages floating well and separating itself from those immensely here. 6 straight days of an upward movement across most of the futures months. What do you got to say about this rally and kind of what's been kicking us off here the last week or so?
Yeah, it's been huge. So we started the week below that gap near the top. So the gap was created on October 16th there, and then we gapped lower and went lower because of Trump, kind of targeting the beef, high-priced beef, and then we had a few things that really shook up the market last fall and took it way lower, and we've been on a grind higher since then. Kind of plateaued in February, March. We were kind of flat to lower, and then we just took off here this last week and on a few different things, I would guess.
The month of February was really surprising to me because as you look at this chart, when I looked back and we started to retrace, when we started to rally in December there, I was like, okay, let's get a picture-perfect textbook scenario, 50, 61% retracement. We're not going to get anywhere close to that old high. And we've now put in new highs. This is an incredible rally versus what I thought this market was going to be capable of, Jace, especially in the phase of the cycle. How long this rally's been lasting. We've recouped so much of this and then some. I'm just surprised.
Yeah, it was a huge rally, and like you said, we were looking at retracements that whole time. It was never really a discussion of new highs again. That was obviously in the back of our minds, but now getting into the January report didn't show much heifer retention, so that kind of kept us going a little bit there. And then since then, we've just been picked up by stronger meat, stronger cash. It's been a pretty bullish story.
Over the years, I remember there was some study that I was involved in where we talked about the correlation between what makes cattle prices what they are, right? And there was like a 93% correlation between supply and price. And today, we still don't have the cattle numbers, do we?
We don't. And we have really good demand.
So on that front, what does the cash market show us here this week?
So cash last week was 238 towards the top end. There was a lot of trade at 236, 237.
That would have been a couple bucks more than the week prior.
Yep. That would have been a little stronger, but
mainly Friday afternoon, right?
Mainly Friday afternoon, and nobody was too excited about that. And even heading into this week, we didn't know what we were going to find. Greeley's still on strike. We still didn't know what we had for leverage, and then today came along.
Yeah, no kidding. So today's cash news, someone must have seen this coming through this week with the massive rally in futures we had, but 246 so far, I think, has been paid here this afternoon.
Yeah, it started out at like 243, and it's just been climbing since then. Some guys in the South have passed 246, but there have been a lot of cattle traded at 246.
One of the other reasons I think the Packers may be able to be a little bit more flexible on this, futures going up, maybe pushing cash alongside of this. The Packers are probably going along with it because their margins have improved a little bit recently, haven't they, Jace?
Yeah, they have. So if we look at beef cutout, the choice last year ran elevated to the years prior by quite a bit, the whole year. And we saw seasonal rallies. Like it was just a seasonal market from an elevated level. And what we're seeing this year is just another step higher. Like we've got,
and then some.
but we've got got above 400 there on the choice, and we've taken a little bit off of it, but we kind of did the same thing last year. Early April, we took a little bit off of the boxes there, but very, very elevated level, and they've built themselves some cushion, you know. Like if you look at what they're paying on the meat side, even today, they're paying $385 to $390 on the dress side for cash, and they're selling the meat out the door in the mid 390s. So it's still, you know, that's getting significantly tighter, but they have been making money for the past few weeks.
Okay, do you want to pull up the Packer margin graph there on the next slide? I believe that helps tell a fantastic story. Just that it surprises me a little bit that we've been able to do this, because I sure thought, especially after the JBS situation, I thought the Packer had all the leverage, and maybe they still do. But nonetheless, now that they've got a little bit more flexibility, they're willing to share on this rally higher, aren't they, Jace?
Right, and they have increased kills over the past couple weeks here now compared to what they were really, really low. And that was at the start of the Greeley strike and all of that. But since then, we've seen them start to pick up a little bit. They want a little bigger share in this profit margin, and I think they're kind of, wouldn't say giving it away, but they're willing to lose a little bit of their leverage to participate in this.
It's odd holiday week here. How are you expecting this week's harvest to look going into the weekend here?
Yeah, I think we'll obviously be shorter than we are on a normal week, but I wouldn't be too surprised if we were, I don't know, 50,000 less.
The last few holidays, I feel like we had the Packers were in a situation where when the holiday came around, they're like, thank goodness I can shut down for a few days here and not have to worry about it. This time around, not so much the case, is it?
Yeah, it's a totally different position when they're making money.
So the outside markets obviously could be playing a part in this recent rally that we've had as well. Donald Trump last night made an announcement at 8 o'clock Central Time last night that has massive market implications. When he came out, the S&P dropped really hard last night, down 100 points. That moved the cattle futures lower at the start of the day, but couldn't hold on to it. Too strong cash, and the S&P bounced all the way back today. Crude oil held its head up high, up massively in the front month. This Iran conflict is still impacting our markets today. The equities continue their slide off, mainly just in a risk off. Meg 7 taking a lot of the brute force on that guy. There's no major cracks or ripples in this economy at this point. Low unemployment, GDP is going up. Even massive money flow into the bond market seems non-existent. We're seeing some increased, but nothing alarming. At this point, Jace, the outside market is having an effect on the live cattle market, but I thought it participated pretty well this week in light of some vulnerabilities, I feel like, in those outside markets.
Yeah, it absolutely did. And like the run up last fall was along with an S&P that was headed higher. And
yes.
I mean, it was just a perfect storm then. And now you would say it's driven almost entirely by fundamentals.
The cattle market, that is.
The cattle market.
Yeah. Speaking of that, we'll wrap up with one last question here. On the weather front, a lot of talk about what Nebraska's got going on right now in the cattle country. The southern United States has been pretty dry. Nebraska and Kansas missed out on some rains probably here in this little front. What can you tell me about the weather situation and how that's impacting the cattle market?
Yeah, so I think especially in the South, like we've seen wheat prices dropping here. They're getting rains where they need it for the winter grazing. So Texas, Oklahoma, they're getting some rains now. They think they'll be able to keep calves on wheat a little longer, and on already short sale numbers on the feeder cattle side, that's getting tighter. So we're seeing the index rally here, and I think that'll continue.
All right. Well, thank you for joining us here today. Thanks for tuning in. Reminder, click the link in the description to sign up for our daily market commentary, get fast insights into the ag markets, and so much more. Also, check out our website at professionalagmarketing.com. Thanks, guys.